Alright, hi everyone. Welcome to today's webinar brought to you by IC Markets. Trust you've had a great weekend, and let's begin today's session as we kick off the brand new trading week. Right, before we start today's webinar, right, please take note of the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. So take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's up on the calendar for this week. There's quite a few things going on. I want to bring your attention towards the US macroeconomic data that's out this week. Tomorrow on Tuesday, 14th of January, we have PPI data, followed by CPI data on Wednesday, the 15th of January. And finally on Thursday, on the 16th, we have US retail sales as well. Now looking at the calendar, right, PPI will drop at 1:30 p.m. GMT tomorrow, followed by CPI on Wednesday at the same time, which is also going to be 1:30 p.m. GMT. And we also have retail sales out on Thursday, right? In addition to US data, we also have inflation data out of the UK. That's going to be on Wednesday, 15th of January at 7 a.m. GMT time. We also have GDP data and retail sales out of the UK on Thursday and Friday respectively. And on Friday as well, we have GDP data and industrial production figures and retail sales out of China as well. So there's quite a pretty heavy calendar. And not forgetting, we also have the Australian Labour Force report, and that's out on Thursday, 16th of January at 12:30 p.m. GMT time. Right, taking a slightly closer look at US PPI. Right, PPI is the Producer Price Index. This is the metric that measures wholesale inflation. And when looking at headline PPI, which is the chart on the left, we can see that it has accelerated over the last 2 months, rising as high as 3% in November. While the core reading, which is the chart on the right, remains stubbornly sticky with a reading of 3.4% in November, the highest reading since February of 2023. Now we can see the forecast for December pointing to core PPI rising 0.2% month over month, while headline PPI is expected to rise 0.4%, right? Both of which are matching the previous month's figures and marking a relatively stronger increase in prices. So should we see PPI data come in hot once more, right? If we see headline PPI accelerate further beyond 3%, and we see the core PPI remaining stubbornly sticky at around 3.4% or perhaps even higher, this is quite likely to trigger another round of strong demand for the US dollar. And then on Wednesday, 15th of January, right, we see a similar tale for the consumer price index. We see headline CPI accelerating over the last 2 months, rising to as high as 2.7%, right, rising to an annual rate of 2.7% in November, while the core CPI remains unchanged at 3.3%. Remember, all these figures are still well above the Fed's target of 2%, right? The Federal Reserve has an inflation target at an annual rate of 2%, and very clearly, with headline CPI at 2.7% and core CPI at 3.3%, this is clearly well above the Fed's target. And in addition, when we look at the forecast for December, we can see headline CPI is expected to accelerate to 2.9% for the month of December, right? Take note, in November, it rose to 2.7%, and for December, it's looking to accelerate even further. Now, this could be the second catalyst. This could be the second bullish catalyst for the dollar index. So take note, we could have a scenario where in the first half of the week, we could see hotter than expected inflation data, which would drive demand for the US dollar higher. And of course, that would in turn push the dollar index to climb higher as well. And finally, US retail sales drops on Thursday, 16th of January. Consumer spending in the US has been strong since September, right? Due to a combination of holiday shopping season as well, right? The Christmas holidays and Black Friday sales has kept consumer spending robust, right? This is the chart on the left shows the monthly increases for US retail sales, while the chart on the right shows the annualized readings, right? So we can see here at an annualized rate, Retail sales have also accelerated over the last couple of months, and we can see that consumer spending has been strong since September. And when we look at the forecast for December, core retail sales are expected to grow strongly, rising 0.5% month over month, while headline retail sales are expected to grow strongly as well, 0.6% as well. So we are likely to see another month of robust consumer spending, which again is likely to drive the dollar index higher this week. All right, before we start today's analysis, do take note if you have any requests, do drop them in the chat box here, and also at the same time, please like the smash button. Please smash the like button as well on YouTube. All right, hi Ajay, hi Jack, good to see you as well. All right, today's webinar is in English, right? The Bahasa webinars will be on Thursday. All right, so with that, let's move on into the charts and trading view and begin the analysis on the dollar index. Of course, we'll work our way through some of the major currency pairs. We'll look at the British pound, right? We'll look at cable since we've got inflation data, GDP data, and retail sales out of the UK. We'll also look at the Aussie. We've got labor force report out on Thursday. Then we'll take a look at the commodities, touching on gold and crude oil and the indices, and of course any other instrument that you like. We'll touch on crypto as well, looking at Bitcoin and Ethereum. But of course, we'll start off with the dollar index, and we'll begin the analysis on the daily time frame. Right, we can see here. Okay, before starting the analysis on the daily time frame, let's switch on over to the 30-minute time frame and look at what happened on Friday. Remember, we had non-farm payrolls that were released on Friday, 10th of January at 1:30 p.m. GMT time. Let me just switch this back to GMT. Right, so at 1:30 p.m. GMT time, the non-farm payrolls report was released, and we saw another strong month of employment figures for the month of December. So that caused the dollar index to surge as well. Right, it was trading at around 109.10 prior to the release of the report, and it surged as much as 0.8%, rising about 84 pips in the process, right, in a matter of 5 minutes. Right, if you look at the 5-minute chart, right, in a matter of minutes, it surged nearly 0.8%, rising 84 pips before pulling back quite sharply, but then stabilizing at around 109.70 as we wrapped up Friday's session. Right, so you can see here a very strong surge in the dollar index following a robust set of employment figures as reported by the Bureau of Labor Statistics, which showed us the non-farm payrolls and the unemployment rate. So non-farm payrolls bounced higher or grew stronger than expected, while the unemployment rate edged lower to 4.1%. And that has followed through into today as well. On Monday, the first trading day of this week, with demand for the dollar remaining elevated, once again causing the dollar index to surge beyond 110 today. Right, now coming back to the daily time frame, and let's just tidy up the chart a little bit. We can see here demand for the dollar has remained resilient. Right, it's been very strong, causing dollar index to break above 110 today, and is rising towards the pivot. Pivot has been identified at 110.55. This is a resistance level that's not only accompanied by Fibonacci projection at 61.8%, but it's also a pretty decent overlap resistance when we look at it. When we look at the market structure, or when we look at the chart back in September of 2022, we can see here the dollar index is trading at levels last seen in November of 2022. So this is like a 2-year high, and it's approaching what I see a pretty decent overlap resistance that's accompanied by Fibonacci projection at 61.8%. And we see the dollar index running into resist. Oops, hang on. We see the dollar index running to resistance here on 6th of September 2022, then briefly finding support just around this region. Once again, it's not the cleanest level, but yeah, you can see it has found support around here, 110.50, and then has run into resistance once more on 10th of November as well. Right, not the cleanest overlap, but it's still a pretty decent level that I would keep an eye on. And it's also accompanied by Fibonacci projection at 61.8%. Right, so this is where I think the dollar index could potentially stall, right, and make a small pullback, maybe something similar to what we saw at the beginning of this year, right? And if it's a deeper pullback, it could be something as deep as what has happened at the end of November as well. But for now, right? I think we're going to see the dollar index make a strong push towards the pivot at 110.55, which is a resistance level, overlap resistance that's accompanied by Fibonacci projection at 61.8%. In terms of support, the first support at 109.25 is a pullback level. This level previously functioned as a swing high resistance here on 3rd of January, and once the bullish breakout took place on Friday 10th of Jan, this level is now likely to function as a pullback support, which has been identified at 109.25. And higher up, of course, higher up, the first resistance at 111.92 is identified as another overlap resistance, right? Once again, not the cleanest overlap resistance, but I do see support here. We are in October of 2022. There is a little bit of resistance here in November of 2022. This creates a pretty decent overlap level, which is also accompanied by a Fibonacci retracement at 78.6%, and at the same time, it's also accompanied by a Fibonacci projection at 78.6%. So we have a Fibonacci confluence at this resistance zone here. And of course, we see this index continuing to trade in a strong uptrend, and also at the same time trading above the green Ichimoku cloud, which highlights the ongoing bullish momentum. Now, of course, if dollar index has risen strongly since the end of September, right? Remember, from the end of September, it dropped as low as 100.10, and since then it has reversed to bounce very strong, to rise very strongly. And of course, if that's the case, then currency pairs like the euro and the pound have been falling sharply as well. So let's take a look at cable, right? Since we've got CPI data, GDP, and retail sales for the UK being released this week, and we can see that cable has dropped significantly as well. Looking from this peak in on 22nd of September to today's low, we can see this currency pair has dropped nearly 10%, right, losing almost 1,330 pips in the process. This is a very huge move for the cable, right? The pound has been one of the most weakest major currencies in recent weeks, and that is shown in today's sell-off as well, right? We can see now cable falling for the 5th consecutive day since Tuesday 7th of Jan. It has actually broken through what was previously a swing low support, right? This level here at 121.95 was previously a swing low support that had taken place in November of 2023, but that level has given way very cleanly today. Is it broken through a prior support? So this prior support could now potentially be a resistance. So this is how we've identified the first resistance, which is at 1.2195. Now with cable falling sharply, right, it's heading towards what I see is a nice multi-swing low support, right? It's almost like a double bottom here. First swing low taking place on 3rd of October 2023, and the second taking place here on 25th of October 2023, right? This is like a double bottom here, and it's falling towards a multi-swing low support at 1.2067, which has been identified as the pivot. So if you've been short cable since the beginning of since markets reopened this morning, or perhaps since last week, right, identifying your take profit target at around 1.2070 is a suitable area to do so, right? We can see that not only this is a multi-swing low support, it is also accompanied by a Fibonacci projection at 78.6%. So looking at this, how do we find this projection level? Well, we started 0.1 from this swing high here on 26th of September, going down to swing low on 22nd of November, and ending with a swing high here on the 6th of December, right? We can see that its 78.6% projection aligns very well with the multi-swing low support, which has been identified as the pivot. So take note, any short traders for cable, identifying your take profit target at around 1.2070 and above would be a suitable area to do so. Beyond that, the next support for the cable is looking at 1.1826, although this is a pretty far level, but when we look at the chart, there's really nothing in between 1.2065 and 1.1826, right? We can see there's no real major support, and where I do see significant support taking place is at this swing low at 1.1819 that occurred on March of 2023, and this level is also accompanied by Fibonacci projection at 100%, right? There we go. This is the Fibonacci projection at 100% here, right? So you can see here, cable has fallen significantly, especially over the last 5 days, right? Over the last 5 trading days. from peak to trough. This currency pair has dropped nearly 4%, right, losing 490 pips in the process. So huge downward move for cable. And if you're short on this currency pair, identifying your take profit target at around the pivot, which is a multi-swing low support accompanied by Fibonacci projection at 78.6%, is a suitable area to do so. And of course, we can see that this currency pair continues to trade within the bearish channel and to trade underneath the red Ichimoku cloud as well, which highlights the ongoing bearish momentum. Right, now let's move on over to the Aussie. Right, looking at the Aussie as well, we can see this currency pair trading in a clear bearish channel, and of course at the same time trading underneath the red Ichimoku cloud as well. Right, this currency pair has depreciated significantly as well. Right, if you look at it from peak to the trough of today, it has dropped nearly 11.7%, losing 810 pips. It has broken through the 62 cents level last week, right, and looks to be heading lower, right. Whereas markets reopened today, right, the Aussie was actually initially retracing a little bit higher, so I was expecting it to rise up towards this pivot level at 62.50, right. This is a resistance barrier that has been in place since Friday, 20th of December, but it looks like demand for the US dollar is really strong, keeping the Aussie really depressed and pushing it even lower here. Now, should we see any retracement materialize, right? Should we see any retracement to the upside materialize? It is likely to stall at the pivot, which is at 62.50, and we can see the intersection of the bearish channel and the pivot identifying a potential resistance barrier. Higher up, 63.49 is also a pullback resistance, right? We can see previously this level functioning as a nice swing low support on 13th of November 2023, another swing low support on 19th of April 2024, and the third swing low support here on 5th of August. So this was a pretty strong multi-swing low support, which finally gave way on 17th of December. And once the breakout takes place, the bearish breakout takes place, what was previously a strong multi-swing low support can now potentially function as the first resistance. Now, beyond the first support here, right, which is at 61.40, when we zoom out, we can see here the Aussie has broken through what was a very significant support. This was a very very significant swing low that had taken place on 14th of October 2022, right? We can see this huge move to the downside for the Aussie before stabilizing at around 62 cents before making a very strong bullish reversal, and this support level has given way last week, right? I think just let me see where exactly it gave way on. Yeah, pretty much last week, right? Following non-farm payrolls, this strong support level at 60 cents for the Aussie gave way quite easily. Now, beyond this level, where could be the next major support for the Aussie? We're going to have to zoom out and look at where this currency pair was trading back in March of 2020, right? We're going back almost towards the COVID lows. And with this currency pair trading around 61.40, the next support beyond that could be around it could be at this swing low support here, although this is a huge level, pretty far from where price is currently trading, right? Right, as you can see here, there's no real major support for the Aussie, right? Beyond 62 cents, right? Beyond 62 cents, there's no real major support for the Aussie, except for this swing low here that has taken place, right? On 3rd of April 2020, right? We can see a nice swing taking place here, or a pullback taking place here before the Aussie continued to climb higher. So you can see there's no real major support in between where the Aussie is currently trading and 59 cents, 59.90. Right, so this currency pair, just like cable, is extending its downward slide, and the momentum is clearly on the bearish side here. All right, so these are the key levels for the Aussie here. So similarly with this currency pair, right, if it makes any retracement to the upside, it's likely to help us identify a potential bearish reversal opportunity, right? And of course, we're going to be targeting close to the lower trend line of the bearish channel as any potential take profit exits, because we don't see anything, any support, clear support all the way down until 59.90. Right, then let's move on over to dollar yen. Right, let's take a quick look at dollar yen before moving over to the commodities. Before moving over to the commodities, right, we can see dollar yen. Despite strong demand for the dollar, right, despite strong demand for the dollar yen, although is in a strong uptrend, it has actually pulled back over the last 3 days. This is the third consecutive day that the dollar yen has dropped lower and is falling towards what I see is an overlap support at 156.29. This level previously functioned as a nice swing high resistance back in mid-November of 2024. After that, it proceeded to function as support from 23rd of December till 6th January this year. So this creates a nice overlap level, which we have identified at 156.29, which is the pivot, right? The pivot is an overlap support. Now, is this overlap support is also accompanied by Fibonacci retracement at 23.6%. We found this retracement by running, starting from here, this swing low on 3rd of December, going up to the high of last Friday, and you can see the 23% aligned very well with the overlap support. So for the dollar yen, we're looking for a potential bullish bounce off this level. Should we see the dollar yen stabilize around the pivot over the next couple of days, it's going to help us identify a potential buy opportunity for this currency pair. Now, below this overlap support, which is the pivot, the next major support sits at 153.44. This is another overlap level that's accompanied by Fibonacci retracement at 50%. Right, we can see that although this is not the cleanest overlap, but we can see dollar yen reacting up this level several times. Right, we see resistance here at the end of October 2024. We see support here in the third week of November, and then we see support once more in mid-December. So this creates a pretty decent overlap level, which we can identify as the first support, and it's also accompanied by Fibonacci retracement at 50%. So once again, for the dollar yen, this currency pair is pulling back towards the pivot at 156.29. This is an overlap support that's accompanied by Fibonacci retracement at 23.6%, and we're looking for potential bullish bounce of the pivot here. Now higher up, I see a nice overlap resistance at 160.25, right? So should we see this bullish bounce materialize, right, you can identify the first take profit target. You can identify the first take profit target at 158.55 around this level here. And of course, if this currency pair continues to climb higher, we can then identify the next take profit target, and that's at 160.25. Now this is an overlap resistance because we can see a nice swing high being formed here in April of 2024, after which this level then proceeded to function as support in early July and the first couple of weeks of July, right? So this creates a nice overlap, which can be used in the identification of the first resistance. So take note, dollar yen is falling towards an overlap support, which is the pivot. We're looking for a potential bullish bounce of this level, and should that bullish bounce materialize, we can identify the first take profit target at 158.54, which is this resistance barrier that has been in place since last week. And of course, should this currency pair continue to climb even higher, we can then target close to 160, which is the first resistance, as the next potential take profit target. Right, now let's move on over to the commodities, looking at gold. Right, we can see here, after what was a very strong bullish move throughout 2024, right, we can see gold rising. Right, let me see here. We look at, okay, let's just see at the lowest point from 2024, right, in February, 14th of February, all the way to the intraday all-time high, right, the intraday all-time high for spot gold. Where is it? Right, occurred on 31st of October, and we can see this is a huge bullish move, right? This move was as large as 41%, right, with spot prices rising as much as $80 per ounce here. So huge move in 2024. But since 31st of October, right after this strong pullback in the first half of November, gold prices have sort of just consolidated between $2,580 on the lower bound and run into resistance at around $2,720 on the upper bound. So this overlap resistance has been identified as the pivot. We can see that gold prices have stalled at this level several times, right? It stalled here on 8th of November, made a swing high resistance here on 25th of November, and made a second swing high resistance on the 12th of December. So very clearly, this is a strong resistance barrier, which was previously a support level in the third week of October. So this creates a nice overlap, which we can identify as the pivot. So the pivot is an overlap resistance. That's accompanied by Fibonacci retracement at 78.6%. So we found this retracement starting from this swing high on 31st of October, going down to the low on 14th of November. We can see that the 78.6% projection retracement sits slightly above this level here. So with this barrier being in place since 8th of November, should we see gold prices rise up towards the pivot, it helps us identify a potential bearish reversal opportunity. So should we see price stall around this level once more, it helps us identify a short entry for gold. And should that bearish reversal materialize, we can then target a potential take profit area close to the first support, and that's around $2,600 per ounce. And in between as well, I see a pretty decent overlap support here as well at 2,633. Right, pretty decent overlap here. And I also see another pullback here at 2,657. Now these intermediate support levels, right, can be used as potential take profit targets as well. So should we see gold prices rise up towards the pivot, right, and we see that bearish reversal materialize, we can then identify several take profit targets for the short trade. The first one being at 2,657, which is a pullback support. Second one at $2,633, which is an overlap support. And finally, the third take profit target at $2,585, which is a swing low that has taken place on 19th of December. Now, at the same time, since gold has been rising strongly since last Tuesday, 7th of January, if you have been long gold since last week, identifying your take profit target close to the pivot is a suitable area to do so, right? You can see here, this is a strong bullish rise for gold since 19th of December, right? Of course, with some strong pullbacks along the way, but should we see gold hit the pivot once more, this is a suitable area to identify your take profit target for any long trades that you may have. And of course, consequently, should the bearish reversal materialize, we are then going to be using this support levels as take profit targets. Remember, take profit target 1 for the short trade is at this pullback level at $2,657. Second TP target is at $2,633, which is an overlap support. And the final take profit target is at 2,585, which is a swing low support. Now, beyond the pivot, which is an overlap resistance, clearly the first major resistance beyond the pivot is the swing high that has taken place at the all-time high, right? And that's around $2,787 per ounce. Right, so these are the key levels here for spot gold on a daily time frame. Let's see, on this nice uptrend, we can probably run a Fibonacci retracement, right, with today's candle currently pulling back, right, in the green. So we can run a Fibonacci retracement from this low on 18th of December, going up to the high of last Friday. When we look at all the fibs, we can see 38.2% aligns pretty well with this pullback support. And we can also see 61.8% sitting slightly below the overlap support. Let's just keep 38 and 61, and then we'll get a much better, closer view or better view of the 38.2% retracement and the 61.8% retracement here. Right, there we go. This is much more clearer now. Now, of course, if gold reverses and breaks higher beyond $2,697 per ounce, then this retracement level is no longer valid. So remember to delete it from the analysis should we see gold prices break higher over the next couple of days. Otherwise, these retracement levels are going to be valid. All right, then let's move on over to crude oil. Right, XTI USD is the instrument that tracks crude oil futures. right? And we actually saw gold crude prices making potential bullish breakout earlier, right? But over the last couple of hours, it's dropped back. Now, crude prices have seen a strong rebound since 6th of December, but what has really driven this surge in higher prices since last Thursday has been the new sanctions imposed on Russia's oil exports, oil and gasoline exports by the US. So take note, this is something new that has materialized since the end of last week, right? The US imposing tougher and new sanctions on Russian exports with regards to their oil and gasoline. So that has caused oil prices to surge higher, right? Uh, Last Friday, it came very close to breaking above $78 per barrel. It looks like it uh, broke above it today, making a case for potential bullish breakout, but looks like that bullish breakout has failed as of now, right? I was expecting a bullish breakout to materialize, but it looks like it has failed for now. So it looks as though crude prices are going to pull back a little bit today, maybe over the next couple of days, pulling back towards the first support. So the pivot, right, the pivot at $78.08 is actually a multi-swing high resistance. First swing high resistance taking place here on 27th of August. Second resistance taking place on the 8th of October. And it looks like it has run into resistance once more. Remember earlier in the day, this was looking like a potential bullish breakout opportunity, but it looks like that breakout has now failed, and we're looking at a potential pullback, maybe all closer down towards the first support. Now, with prices currently pulling back, we are now able to run a Fibonacci retracement from this swing low on 6th of December, going up to the high of today. And when we look at all the fibs, we can see that the first support, which is the pullbacks level, first support is a pullback support, right? And it's also accompanied by a Fibonacci retracement at 23.6%. Right, so should we see WTI oil stabilize at around the first support at $76 per barrel, right? It can help us identify a potential entry as well, right, for potential bullish bounce. So crude prices are in strong demand, or crude oil is in strong demand, and led by the tougher sanctions and newly imposed tougher sanctions, prices have received a nice tailwind, and we've seen WTI oil break above $78 per barrel earlier today. It looks to be pulling back now, and perhaps if we can consolidate at around the first support, which is around $76 per barrel, it helped us identify a potential entry to ride the bullish momentum, right? And should we see prices make a second attempt towards the pivot, which is at $78.10, right? This is where we can identify the first take profit target for any long crude oil trades. And of course, if it does manage to finally break above this multi-swing high resistance, if we do see that bullish breakout materialize, we can then target another major resistance, which is at around $80 per barrel, right? When we look at the chart here, we can see that this overlap resistance is also accompanied by Fibonacci retracement at 78.6%. We started this retracement from this swing high on 5th July 2024, ending with a swing low on 10th of September. And we can see that this retracement level accompanies a pretty strong resistance overlap as well. And we see a nice swing high taking place here on 28th of May 2024. We see support from 24th of June till 17th of July. And finally, when this level gave way, it ran into resistance, making a swing high here on 13th of August. So very clearly, this is a very significant overlap, which is also accompanied by Fibonacci retracement at 78.6%. And that's how we've identified the first resistance. Right, so these are the key levels here for XTI USD, right? This is the instrument that tracks WTI crude oil futures. Now let's move on over to the indices. Let's look at the DAX. The 40 is the instrument that tracks the DAX. You can see here, after running into resistance last Wednesday, 8th of January, it is now falling for the second consecutive trading day, right? And we can see here this level at 20,476 is a multi-string high resistance, right? We see the DAX making its intraday all-time high on Friday the 13th. Quite ironic, right? On Friday the 13th, the DAX made its intraday all-time high, hitting 20,526. And since then, it has failed to surpass this level, right? It came very close last Wednesday, 8th of January, but failed for the second time, and has been falling quite strongly over the last two consecutive trading days. It is falling towards what I see is a nice overlap support, right? The pivot at 19,681 is identified as an overlap support because we see previously the DAX running the resistance at this level from 18th of October till about 30th October, and after the bullish breakout took place, we see this level functioning as a pretty decent swing low here, creating a very nice overlap at around 19,680. So the pivot is an overlap support that's accompanied by not one, not two, but three Fibonacci retracements. Now, how do we find these retracement levels? Right, the first one was starting from here, this swing low on 19th of November, going up to the intraday all-time high on 13th of December. We can see the 50% retracement aligning very well with the pivot. Second Fibonacci retracement starts from here, this swing low on 10th of September, of course ending with the intraday high on the 13th of December, and in this case we see the 38.2% retracement aligned very well with the pivot again. And finally, the final Fibonacci retracement starts from this swing low from the low of August, going up to the intraday high, and we see the 23.6% retracement aligning well with the pivot. So we have three different Fibonacci retracements around this overlap support, which signifies the strength of this support level here. Right, so quite likely we could see DAX stabilize around this level, and should it reverse to bounce higher, right, it helps us identify a pretty decent opportunity to play a bullish bounce for this index. Now, looking below, the next major support for the DAX beyond the pivot is at 18,971. This is also an overlap support, right, as we see the DAX making a swing high resistance in early September, running the resistance once more at the end of September, and after which this level proceeded to function as support in early October, making a nice swing low bounce here and making almost like a double bottom here in end November. So very clearly, once again, another very clear overlap level at 18,971, which we can identify as the first support, and this level is also accompanied by Fibonacci retracement at 61.8%. So this retracement level belongs to this retracement that began from swing low of 10th of September. Right, so take note, DAX is falling towards what I see is a nice, very strong overlap support. Which is accompanied by not one but three Fibonacci retracements. This is where it could potentially stabilize once again and reverse to bounce higher, right? And beyond that, the first support, beyond the pivot, the next support is at 18,971, and of course, this multi-swing high resistance at 20,476 is the level that has been identified as the first resistance. So should we see this bullish bounce materialize over the next couple of weeks, perhaps, this is where we can identify a potential take profit target, which is going to be around 20,300 to about 20,470. Right, then let's move on over to US 500. US 500 has been pulling back quite strongly as well, right? We can see this index dropping for the third consecutive trading day, and is falling towards what I see is an overlap support at 5,673. Right, I see a nice swing high. I see a nice swing high resistance taking place here in mid-July. Resistance once more at the end of August, early September, and then once the bullish breakout took place, we see a nice swing low being formed here in the second week of October, and the second swing low being formed in early November. So this creates a very nice overlap level at 5,673, which we have identified as the pivot, right? This is an overlap support that's accompanied by not one but two Fibonacci retracements. The first retracement was found starting from this swing low on 5th of August, going up to the intraday all-time high that was formed on 6th of December. We can see that 38.2% retracement sits at around 5,714, and the second retracement was found from here, this swing low on 6th of September, ending on 6th of December, and we can see the 61.8% retracement aligning pretty well with the overlap support, which is the pivot. So once again, similarly to the DAX, should we see US 500 fall towards the support zone and stabilize around here, we're looking for a potential bullish bounce of this overlap support here. And if that bullish bounce does materialize, right, there's a couple of price targets we can identify. Right, I see a pretty decent overlap resistance at around 5,867. This is where the first take profit target can be identified, and then the second take profit target can be identified where the first resistance sits, and that's at 6,041. This is an overlap resistance, right? We see support here being formed in mid-December, then we see a swing high resistance here on 26th of December, and we see resistance once more on the 7th of Jan. Right, I would also like to highlight a descending trend line here. Right, there's a very pretty decent descending trend line that's been in place since mid-December. Right, we can see US 500 stalling not once but twice at this level, at this descending trend line, first taking place on 26th of December and then again on 6th of Jan. Very clearly this descending trend line has been respected for now, and of course should we see US 500 fall down towards the pivot level here, this is where it could stabilize and potentially bounce higher. But before that, if you have been shorting US 500 as well, especially after making the second bearish reversal of the descending trend line, right, it has been in a strong downtrend since 7th of Jan, right, we can identify a suitable take profit target for any short trades close to the 38.2% Fibonacci retracement, right? So as US 500 falls towards 5,720, 5,715, right, this is a suitable area to identify as a take profit target for any short trades that you may have for this index. And moving forward, should we see US 500 stabilize at around the pivot and stage a bullish rebound, we are then going to identify several take profit targets for the long trades. The first of which is going to be this overlap level at 5,867, and beyond that is going to be this little swing high that has taken place here on 6th of Jan, and that's around 5,983, right? And of course, if it makes a clean break above this descending trend line, right, that would really show the bulls coming back into favor. And then of course we are going to be targeting the higher resistance levels as the next potential take profit targets for any long trades that we may have for US 500. Right, now let's move on over to crypto. Right, of course, if there's any other requests, please do drop them in the chat box early so we have time to go through the analysis together. Otherwise, let's move on over to Bitcoin and Ethereum. Right, so looking at Bitcoin, right, after making this intraday high, all-time high on 17th of December, right, it has failed to reach this lofty levels, right, at around $108,390. It actually made a pretty decent retracement here at the beginning of the year, but prices stalled at around 102,000. So we can also identify a nice descending trend line for Bitcoin here. This is a nice descending trend line that's been in place now since 7th of Jan here. Now, Bitcoin is trading very close to what I see is a nice overlap support. Right, this is an overlap support at 91,742. We can see Bitcoin making a small resistance here in mid-November, after which it has bounced off this level several times. First bounce taking place on 26th of November, second bounce on 6th of December, third bounce here on 20th of December, the next one on 30th, and then the most recent one last week on Thursday. Now it is approaching this level once more, so should we see Bitcoin stabilize around the pivot, this is where we can identify a next potential bounce for this coin. And should that bullish bounce materialize, we can then, why is this here? Should this bullish bounce materialize, we can then target the area that is identified by the descending trend line as the first take profit target for the long trade. And of course, should it break above the descending trend line, we can then identify this swing high that occurred on 6th of Jan as the next take profit target. Now beyond this overlap support, which is the pivot, right? There's nothing in between, right? You can see there's a huge gap between $91,000 and $73,000, right? There's a huge gap here. There's no real support here. The next major support that I see is at 73,176. This is the pullback support level, which was previously a strong resistance barrier, right? We can see a swing high resistance being formed here in March of 2024, running the resistance once more in April, and you can argue here as well in running the resistance in the third week of May and early June. Then of course very clearly this is resistance once more on 30th of October, and then the bullish breakout materialized. So this was a pretty strong multi-swing high resistance which finally got taken out in November, which is now going to likely function as the first pullback. Right, this is the pullback support at 73,176, which is also accompanied by Fibonacci retracement at 61.8%. This retracement was found starting from this swing low on 5th of August, going up to the intraday all-time high, which is on 17th of December here. But you can see beyond the pivot, right? The pivot is an overlap support at 91,742, right? We can see very clearly there's no real major support in between here. This is a pretty huge gap, so we better hope that this level holds up. Otherwise, there could be further downside action for Bitcoin here. All right, hi Ajay. All right, Ajay has a request for dollar CAD, Aussie dollar franc. Ajay, we've already done the Aussie, right? We've already done the Aussie, so I'll cover dollar CAD and dollar franc after Ethereum. All right. Okay. Oops. And when we look at all the fibs, let me just take a quick look at all the fibs here. Nope, it's only the 61 that we can use. Right now, let's take a quick look at Ethereum. Ethereum is also falling towards what I see is a pretty decent pullback support level at 33,085. Right, we see Ethereum stabilizing here on 25th of July. Then after gapping higher, it stabilized here in mid-November. Bounce off this level once more on 20th of December. It is approaching this pullback support once more. And if we do see Ethereum stabilize at this pullback support level, which is the pivot, we could see a potential bullish bounce. Right? It's not a strong bounce, but a weak bounce as well, because we see a series of lower highs, right? Similar to Bitcoin, we're seeing a series of lower highs. And I would add in a descending trend line as well over here for Ethereum. So the intersection between the descending trend line and the first resistance is going to be key, and of course the descending trend line itself is also going to be key in identifying whether the bulls are truly back for this coin as well. Now this pullback support at 3,085 is also accompanied by Fibonacci retracement at 50%. We found this retracement starting from this swing low, 5th of August, going up to this high here on the 16th of December. We can see the 50% retracement accompanying the pivot, which is the pullback support, very nicely. And we can also see the 61% accompanying an overlap support at 2,805. Right, we can see Ethereum making a swing low bounce here off this level. Actually, I can even stretch this level all the way back to here. Right, pretty decent overlap that begins from 1st of May. Right, we can see support for Ethereum here in May and then in July, after which this level proceeded to function as resistance. In August, you can even argue here this was resistance here in October. So this is a very significant overlap level that's accompanied by Fibonacci retracement at 61.8%. So that's how we've identified the first support. Our first resistance is at 3,540. This is another overlap. I see a nice swing high resistance being formed here on 21st of July. Then I see support on 3rd of December, and then again on 10th of December. Then I see resistance once more on 26th of December, right? Once again, not the cleanest overlap, but you can see very clearly where price has reacted off this level several times, right? Making us keep an eye out on this level here at $3,540. Right now, before I continue, I'm going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with the analysis on dollar CAD and dollar franc. Right, okay, so I just launched the poll. Truly appreciate it if you guys can give your feedback with regards to today's webinar. And at the same time, I can see a few of you have smashed the like button as well. Right, cheers for that. Right, then let's move on over to dollar cat. Dollar cat, right? We can see the loonie, right? The Canadian dollar, otherwise known as the loonie, has depreciated significantly since end of September. And we can see this currency pair has climbed as high as 7.8% from trough to peak, right? Rising more than 1,000 pips, right? Huge move for dollar cat, but it seems to have stalled at around 1.4450, right? We can see that this currency pair has stalled around this level several times, running to resistance here in mid-December, at the end of December after Christmas, and then in early Jan as well. And it's testing this level once more, so we could potentially see dollar cat stall at this, what I would say is a multi-swing high resistance, which has been identified as the pivot, and that's at 1.4447. Now, should we see the dollar cat stall at this level once more, it could make a pullback towards 143.35, which is what I see is a nice support level, right? Probably not really the cleanest level because of this wicks here that occurred on Monday 6th of Jan and Tuesday 7th of Jan, but generally you can see how 1.4335 would be a pretty strong support level as well. Now beyond the pivot, the next resistance is likely to come in at a level that's identified by the Fibonacci extension at 161%. We started the extension from here, 3rd of Jan, ending at the low here on 6th of Jan. You can see the 161% extension sitting at 1.4573. Right, and let's wrap things up by looking at dollar franc. Dollar franc has been in a strong uptrend as well. Right, this currency pair from trough to peak, right, has climbed more than 9.7%, right, gaining 800 and over 800 pips, right, huge move for dollar franc. And it is approaching what I see is a multi-swing high resistance at 92.12. 92.12 is where the pivot has been identified. This is a multi-swing high resistance. We can see dollar franc stalling at this level in October of 2023, then stalling exactly at this level here in May of 2024. Should it reach this level once more, this is why I think it's quite likely going to stall and make a small pullback. So that this pivot also tells us that if you've been long on dollar franc, right, you should be identifying your take profit target close to this pivot level here. The pivot level is a multi-swing high resistance that's also accompanied by Fibonacci extension at 127%. We found this extension level starting from this swing high on 2nd of July and ending with a swing low on the 6th of September. We can see the extension at 127% sit pretty well with the multi-swing high resistance, which is the pivot. Beyond this multi-swing high resistance, the next major barrier for dollar franc is likely to come in at 93.34. This is this swing that has taken place here on 15th of March. We can see after falling sharply in the beginning of March 2023, dollar franc reversed strongly over 2 days, especially here 15 March. This was a very strong retracement to the upside, but it stalled at 93.36 before reversing the downtrend, right? Before continuing to resume the downtrend. It's a very strong, potentially strong resistance barrier at 93.34, which we can identify as the first resistance. All right, going to close the poll as well. Truly appreciate it for those who have voted. Thank you so much. Right, and then looking at support, right? First support is at 90.39, right? This is an overlap support. I see a nice swing high resistance taking place here in July of 2024, and I see a nice support taking place here last week, 7th of Jan. So this creates a nice overlap level, which we can identify as the first support. And let me see if you can use a Fibonacci retracement from this low, 6th of September, going up to the high of last Friday. Is there a 23.6% that we could use? No, it sits too far below the first support. That's fine. So let's get rid of that. Right, so these are the key levels here for dollar franc. Right. All right. Hi, Maestro. GJ. So do you mean pound yen? Right. Okay. So we've got time for the pound yen. So let's cover that. Looking at pound yen. Oh, let's start with a fresh canvas. So we can see here pound yen after running the resistance at 190.50 at the end of the year. It has been pretty much in free fall, right? Especially with cable, right? As we mentioned earlier, we saw cable now falling for the fifth consecutive trading day. Pound is clearly being sold off aggressively across all its peers, and we can see, and I see it now falling towards what I see is a strong swing low support at 189.19. So what this support also tells us is that if you've been shorting the pound yen is we can use this pivot level here as a potential take profit target for any short trades that you may have for pound yen, right? And beyond the swing low here, the next major support I see is another swing low that has taken place on Friday the 13th September 2024 at 184.83. Right, all right, welcome Ajay. All right, Maestro, yes, there should be time for US 100. I'll cover that after pound yen. Okay, so we can see here it's falling towards this level here. Maybe we could see a potential stabilization for pound yen. However, if you have been shorting this currency pair, well, since the beginning of as markets reopened today or since last week, identifying your take profit target at around 189 is a suitable area to do so. And resistance, where would I see resistance here for this currency pair? There's a pretty decent pullback resistance here, almost like an overlap, right at 194.29. This is where I would identify the first resistance here. All right, now let's move on over to the last one and look at US tech. Right, so US tech is the instrument that tracks the Nasdaq 100. So let's similar to US 500 as well. Right, it's falling lower. We see a series of lower highs. We can identify a very clear descending trend line, and I see it's falling towards what I see is an almost like an overlap support, right? Maybe again not the cleanest overlap support here at 19,833. There is a little pullback here that has taken place here as well, right? But with the indices selling off quite strongly today as well. I'm not sure if this level is going to hold today over the next couple of days. I think where I would see the first major support would be around 19,883, right? I would identify this as the potential pivot, and then this level here at 20,418 I would identify it as a potential downside confirmation level here. So if this little pullback gives way, right, for the US tech, we can probably expect it to slide even lower and drop towards the pivot, which is an overlap support, right? That's at 19,830. And beyond that, beyond this overlap, the next major support is going to be this swing low here that has taken place on 6th of September, right? It's a huge gap, right? I see it's a pretty huge gap, but I don't really see anything else in between, right? That's going to hold prices up. But yeah, so take note, US tech is approaching this little pullback support level here, right? This level is quite likely to give way. We can already see US tech breaking through the green Ichimoku cloud, right? When the bearish breakout through the green Ichimoku cloud takes place, typically we can expect further downside action. So especially this level here now at 20,418 is going to be our downside confirmation indicator. So if we do see this level give way, we can then expect US tech to drop towards the pivot, which is at 19,830. Now we can also run a couple of Fibonacci retracements. First, starting from here, 6th of September, going up to the intraday all-time high on 16th of December. When we look at all the fibs, we can see 61.8% retracement aligning very well with the pivot, and 50% sitting just below the downside confirmation. So let's just keep these two levels on. And in terms of resistance, right, there is almost like a pretty decent overlap level here at 20,946. This is where I would identify the first resistance for US tech, right? The intersection of the descending trend line and this overlap at 20,946, which is where I would identify the resistance. All right, so that's all I've got for you guys today, right? These are the key levels for US tech, and also take note of the calendar for this week. There's quite a few things going on, but we have inflation data out of the US, PPI data on Tuesday, CPI on Wednesday, and retail sales on Thursday. If all three or majority of these US macroeconomic data points uh, result in stronger than expected data, right? This is likely going to fuel further demand for the US dollar, so we could potentially see the dollar index continue to climb higher throughout this week as well. And in addition to that, we also have um, inflation data, GDP data, and retail sales out of the UK. That's going to be on Wednesday, Thursday, and Friday. And of course, finally on Friday, we have key macroeconomic data out of China as well. We're going to see retail sales figures, industrial production, and GDP output. So take note, it's going to be a pretty strong, pretty heavy calendar, and there's plenty of catalysts to drive financial markets this week as well. All right. Once again, thanks everyone for tuning in to today's webinar brought to you by IC Markets. Do look out for all upcoming webinars for the rest of this week. We got a combination of live analysis and educational topics in English, Thai, and Bahasa. All right. Thanks everyone. Take care. Have a great trading week, and catch you all in the next session.